Good morning, traders from Chicago. It is 7:59. Wow, I actually started too early today. It often takes long for the broadcast to actually start, but today we're starting a little bit early. Well, here it is, 8 a.m. Chicago time. Thanks for joining me today on Monday, the 21st of November, 2022. This is Trader Byte number 2362. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. I'm starting from home today. Just a mic check, please. And then also, there are some gentlemen here doing some remodeling work, and I need to be here to approve some things, so I'm starting from home. And it's there could be noises in the background as they do their stuff. So just bear with me here. We'll get through it. Also, a reminder that this week is Thanksgiving week here in the U.S. Expect that there will be, it'll be quite light in terms of volume. As I talked about on Friday, many families take off these 3 days and enjoy about 8 days off or 9 days off by leaving on Friday, and so the volume is expected to be quite light. So we might see a market that is drifting. Let's take a look at this morning's conversion trading pre-market summary sheet. This morning, really a mixed market. We had opened and fell off a little bit. We're staging a bit of a bounce currently, still below the mid across most indices. But we have a mixed posture, risk posture this morning. In terms of earnings, we had Jacob Engineering, JM Smucker before the open, and then after the close, the major is Dell Technologies, Agilent. We have Urban Outfitters, Maximus, Zoom, ZTO Express. Again, it is Thanksgiving week. Um, the big news is that the COVID cases in China, we're seeing a pretty good pop there in the number of cases out, and the government is recommending that people in the Chaoyang district stay at home. Hong Kong likely to cut non-emergency services at hospitals or healthcare facilities to open capacity for the surge there as well. The index, this is index negative. These are the notes I put into the Convergent Trading Mavens channel last night. Russia and Ukraine are attacking energy infrastructure in both countries. Explosions heard on a Gazprom pipeline as well as in the nuclear power plant in that town that starts with a Z. I can't mention its name, and I don't want to butcher it. Ukraine is recommending its residents move to other areas to reduce the draw on the power lines. An energy crisis in Ukraine right now. FTX's fallout continues as more is revealed regarding activities involving politicians in the U.S. It seems like this SBF was in a lot of people's pockets. U.S. car dealer Carvana is heading for trouble in a cash crunch. The cost of used cars has fallen dramatically. There's just nosediving. And this is causing this major used car provider to get into crisis mode, most likely. Today, what's left on the calendar? Not much. We're looking at a 2-year note auction, 6-month bill auction at 11:30. We're looking at a 5-year note auction and 3-month bill auction at 1 o'clock. For the week, we don't have anything tomorrow that is high value. Wednesday, we have durable goods orders and new home sales, and in the FOMC minutes, that'll be on Wednesday. Thursday is the U.S. markets are closed for Thanksgiving. That day, Germany will release its IFO Business Climate Report, and on Friday, Black Friday here in the U.S., Germany's releasing GFK Consumer Confidence for December, and that wraps up the week. So again, very, very light this week. So that's where we are. It in terms of the indices and trading. A reminder that these rotations are important and they're updated every Sunday, and they're listed as a courtesy to you here in this sheet. The full market stats reports are available to Convergent members, which list out historical probabilities of neutral days, of trend days, of all that stuff is listed there. But understand that the rotations are what we base our targets. One of the inputs we base our targets and definitely our stops on, and they're listed here. They've fallen dramatically from the prior week. You have crude that has dropped from like 36 or 39 cents to 30 cents, and that's that. So that's where we are. The S&P currently balanced 183,000 contracts, well in line. 96% inventory is short, 34 points of range, pretty tight, and the point of control 39.60. Okay, so let's flip to that. Let's look at what's happening here. Let's get to the ES TPOs. ES. So, Friday. I talked at length on Friday about the fact that we were opening at the time of the Trader Bite, we are opening right up against this point of control from this composite of November 13th to the middle of last week. And we are opening right up against it. And I talked at length about the probability of having resistance up here, and that my expectation is for it to rotate down. And what we had on Friday is very, very much in line with what we would expect the auction to do. So here we are. On Friday, we opened in the composite point of control right up here, right against the 39.90 level, and then we tagged to the tick the point of control the prior day, and then bounced and finished and settled at 39.74. So just beautifully executed here. Beautifully executed here. We still see the market holding right on top of Friday's value. The market's stuck in this 39.50 zone. Not expecting that to change very much. Currently, there's not much to price in. So you can see here we had our bounce, and then we terminated the one time framing down, and we held a higher low. So now we're one time framing up on the daily, and until Friday's low is breached, we should expect a retest of that 39.90 area. So that's what I'm looking for as a key play today. Today is likely to determine whether or not we will bounce back up. So we pulled back a little bit. Do we bounce back up and retest this high up here, or do we break the low, in which case we really could see some pretty decent selling down into the 3900 again to retest this tail, and then we're back into the 77, if you recall from Friday, 77, 71, and then free fall to 38.20 below. So that would be if it rolls over and starts to push into the low of last Thursday, then we are likely to squeeze pretty quickly to the downside. We're basically would be breaking from one balance to the next. This is the big picture. So here it is. We break the low, then we would test the next low, and that leaves us with a very thin profile down below. Takes us down 77, 71, 45, and then 20. That's the map to the downside. The map to the upside is 39.90. If you recall, 40, 20, and then 40, 50 is major. Those are the key kind of areas, and this anything in between this 39.90 down into the 39.50. We're opening in this zone here between 39.90 and 39.50. The stuff in here, I'm going to warn you, and I'm going to tell you right now, the stuff that's happening in between these areas is going to be choppy. There's just very little edge unless you're scalping for order flow. Unless you're scalping for order flow and you're seeing something that is order flow based, meaning scalp or very short term, anything inside of that zone there, that 50 or 40 point zone, 990 and 3950, you're really just churning, which is great for your broker and the exchange and your clearing firm, probably not great for your P&L. Okay. All right, so that's that. Let's take a look at it in a volume profile perspective. So here's the volume profile chart. We had that triple distribution profile day last week. Then we had a lower distribution holding. Then we had this multi-distribution low. And then on Friday, we really held what is basically a very balanced profile. To me, the way Friday closed was relatively weak, and this morning we're opening, and we did open and spike up early on, but the open is relatively weak. This morning we went to 39.82 right up here, and came right off. There's an excess high. There's a clear and swift rejection up there this morning. So to me, this looks weakish. This low seems weak to me. We have basically a local double bottom at 39.48 before we bounce to the 62, which is where we are now. This area that we're holding here is right up against the full session VWAP, which is at 58, and then the full session mid, which is at 65. So we're in this sandwich right in here that we're trading in, but overall I'm expecting this low to be challenged, and if it challenges Friday's low, then we do have something to trade with going forward. Looking at the relative delta dominated by small lots, and basically the cumulative delta is tracking the small lots. You can see there's just zero activity from the large lots until this 100 lot kicked in here about 5-10 minutes ago. But other than that, the very large lots have been snaking around the zero line, and we've been sitting sideways while the delta has been moving lower. So to me, it looks like we're likely to be responsive, and we already were. We pushed again, like I said, to 62.75. We're likely to be responsive this morning. The inventory is 96% short. We're likely to see a push, but overall, I'm expecting this 48 quarter, 48 low to be taken. So we may see a quick blurb up, and then I'm looking for to squeeze lower and get us into Friday's low, which is, what was Friday's low? 42 or so, 39.42. I'm expecting that to be taken out. Okay, a quick overview of crude here. Crude is doing something very interesting. I've been bearish crude. Those of you who are at Convergent and see my charts there, I've been bearish crude since this day took place here. We put in a lower high, and we've had these multi-distribution days in crude, and it's just not able to hold on. You can see that it's just making lower highs, lower highs, lower highs, lower highs. But if you look at Friday, Friday hit our key. This was pre-open. This level right here, this is our key support, a green line. I pull this key support off of a much bigger time frame chart, and then on Friday we hit that, and there's just a very thin profile down here before it rallied back and settled at 80.11. I believe that crude has found its buyers for now, and you can see it finished pretty strong. It left a gap behind. Remember, we're trading January crude at this point. You should not be trading December. The Z2 contract is old, and the F3 contract is what's new. And to me, this looks like crude has set up a nice little base here, and it is likely to start moving back through and challenging that prior settle and the gap. And this may be a little bounce for crude, but crude overall has just been very weak, and I think it'll continue to be relatively weak when we look at the overall chart. It's just taken out these monthly levels, taken out some major levels, and is trading below, and I'm expecting these to be resistance as we come back in. So 80.67 up here, expect it to be resistance as it pushes higher, but the close on crude was quite strong on Friday. So what are we looking for today? Here's the overnight session in the ES, really just sandwiched between VWAP and full session mid, right on top of the overnight point of control, expecting a choppy open. And again, anything between 50 and 90, this range here is likely to be pretty choppy. So this morning, what I'm looking for, switch my colors. This morning, what am I looking for here? I'm looking for an open auction. Oops. I'm looking for an open auction that squeezes higher. I'm looking for the overnight inventory to get balanced, and then I'm looking for this thing to give it up down into the 48. Take out the 48 and challenge Friday's low, the prior low a day at 42.50. I'm looking for that to be challenged and for us to start moving down towards that 39.20. The catch here is Thanksgiving. It's a fairly quiet trading week, and it's pretty rare that the market will go directional this week. The alternative is an open auction that moves down, is unable. We get an impulse higher, so we need to see this impulse. We need to see a meaningful move through an impulse higher, and then we have a gap to settle trade. I'll be looking for that. This is the settlement price, gap to settle trade, and then it challenges the overnight high at 82, and now we're resuming the push up into 4,000 as mentioned earlier. That would be scenario 2. So if early on it doesn't take out that overnight low and it seems to just bounce quickly to the upside, then we know buyers are relatively strong, and we're looking for it to turn up, go to the gap to settle, which is right now about a 14-point trade or so, with about 3 points of risk. It's pretty good return. And then from there, I expect it to take out the 82. If we take out the 82, we're looking for Friday's high to push through. So 39.92 basically, and a run for 4,000. It'll further confirm the strength that we saw on Friday, these higher lows. I'll leave you with that. Good luck today, and I'll catch you tomorrow morning. Take care.